Are 5-year interest rates finally starting to come down? And can we stop talking about immigration? Yes, my friends, all this and more with our good friend and mortgage broker, Mr. Dion Begg, right after this. Here we are, my friends, with our favorite mortgage broker in all of the land, Mr. Dion Begg. How you doing, my man?
Hey, Gary, I'm great, man.
Excellent. We got a few things we're going to chat about today. And of course, if you've been playing the Twitter game or anything like that, you've seen some other industry, gurus, if you will, post, hey, we might be seeing a little reduction or how about movement in the 5-year rates or the bond rates. We're going to touch on that just a little bit. And Dion, you've got some information for us about why immigration is so important to Canada. And we're going to touch on that. But let's touch on what's going on in the States and how it affects us up here first.
Yeah, sure. So recently, the US came out with their inflation report, and it came in better than expected. Now, when I hear the word better, you're thinking like significantly better. But what they were expecting was inflation at 4.1%, and it came in at 4% even. And I look at that and go, well, that's not a huge difference. But apparently, it's had a massive impact on how people are perceiving the future. And for us in the mortgage world, especially as it relates to the bond yields and fixed interest rates, which are directly impacted by these types of big movements, so big announcements, it's had a very positive impact for mortgage holders or people wanting to go out and get mortgages, in that we've seen in the last week or so reductions of anywhere from 20 to 30 basis points. That's 0.2 to 0.3% for those people wanting fixed mortgages. So the positive news here is the overall sentiment, which has been attacked by central banks, the consumer sentiment being pushed to the negative, is actually now swinging back to the positive based on these inflation numbers. So these are things that, again, I don't like to count chickens before they're hatched. And this is just the first sort of couple of days of this report coming out. But the good news is sentiment is changing, and fingers crossed things can continue that way. And as we've said before, what that does mean is consumer spending is down, therefore, and unemployment is up, and maybe people have lost jobs, which are all bad things. But on the other side of the equation, it means that this means that interest rates can actually be reduced.
Yeah. And I think we need to be very clear here, or at least I want to be clear in the fact that I don't think, and I don't know about you, Dion, I don't think we'll ever see interest rates, they rose quickly in a sense, in the grand scheme of things. I don't think we're going to see them decline as quickly as they rose. Do you agree with that, or tell me more?
This is the sentiment regarding, what most economists are saying, in that, we did see jumps of 0.75 and 1%, full 1% at one Bank of Canada meeting. On the way down, it's unlikely that we're going to see jumps that generous, to bring those rates down. And I think it's like, if you imagine driving a car, we had to slam our brakes down because we were in the middle of a hairpin turn, and we sort of realized too late that we've done the wrong thing for too long. We left interest rates too low for too long. But on the other way, we're not going to accelerate out of that corner as fast. They're going to be a little bit more measured. And in my opinion, it's unlikely that we're going to see much more than a 0.25 drop at any one meeting. Maybe they'll surprise us with a 0.5, but I can't imagine a 0.75 or a full 1% drop in rate is not something I can imagine.
Yeah. I see the same thing. I think you always learn from your mistakes, or you should be, and you learn from the past. And I think it'll be a much slower movement over the next several years. And I know one of the big banks, I can't remember which one, you'll remind us in just a second, came out and specifically said, because of government spending, that is also contributing why our interest rates are so high. Elaborate on that a little bit.
Yeah, so Scotiabank just last week came out with a report really diving into the reasoning as to why interest rates are where they are. So just to remind everybody, interest rates went from 0.25 to 4.75 at the Bank of Canada overnight rate. So 5.25. We've had a jump of 4.75. So this 4.75 increase, they're saying a full 200 basis points, 2% of it, is attributed directly to government spending. Now you look at that and you go, well, the government did the wrong thing. They've let loose for too long. But keep in mind, a big chunk of that is the CERB and support payments that were given to Canadians during the craziness that was COVID. Right, a lot of people were out of work, not knowing how they're going to make their bills, and the government flooded the system with this money so that we didn't have a massive economic collapse. So, as much as that 2% sounds terrible, some of it really did have to happen. Now, the report goes on to say that, and this is true even in anybody's household, once you start to learn to spend at a certain level, it's often hard to rein that back in, right? Once you make that upgrade to a certain expectation for, just say, let's say, food standards, right? You in your household, you expect to eat, your steak dinner every Friday night, Gary, and I say we've got to switch to hamburgers on Fridays. A lot of people are resistant to that, and it's the same, I feel, at that government level, where government departments have now grown accustomed to receiving a certain budget for a certain program, and they're not willing to give that up. And so I think some of this really needs to be analyzed. And in fact, as we're shooting this today, Monday, the 20th of November, tomorrow, the government is coming out with their fiscal numbers for budgeted spending for the next 12 months. So the hope is that they have looked at these numbers and figured out how can they potentially rein things in a little, so that the percentage of that 2% that they might have the ability to impact, hopefully that's actually going to be done over the next 12 months.
Yeah. Yeah. No, that's interesting. Okay. Excuse me. Let's talk about immigration. And this is a hot topic, of course, of recent time and the last several months, because we attribute people coming to Canada and not having enough housing. And that is absolutely the case. And to me, from the outsider, outside of government, kind of looking in and looking at this, it's like you have this division of government saying we need to have this happen, and they go do it. But
Yes.
they fail to talk to like the other pillar of the government that, basically make sure that there's enough housing and
Yeah.
buildings and everything else. And that's the part that we've been falling short on. Everyone knows. But let's focus on the impact of immigration to Canada from a financial standpoint, Dion.
Yeah. So let me just start off by saying this. There's a lot of people out there who feel that we have an immigration problem. That is not the case. We have a supply problem. Okay. And we need immigrants in Canada. And I'm going to make it crystal clear as to why. And, not a lot has been spoken about the decline in population if it weren't for immigration and the impact of that on society. So I'd like to spend a minute today just going through some slides that I shared recently at another event. And really just focus on the demand side of things. Okay, we've talked about supply, and we'll probably continue to talk about supply in future episodes, Gary. But if I just jump over to this here being one of the biggest factors as to why we need immigrants in this country, and that is our birth rate, fertility rate, also sometimes known as birth rate, and our declining birth rate. So let me show you some really interesting info I found when I did the deep dive into this. This is one of the longest graphs I've ever found. It goes back over 160, 180 years, something like that, back to the year 1860 when they started recording birth rates or fertility rates in Canada. And this is back in 1860. The average household had close to 6 children in their home, right? And back in the day, Gary, not just in Canada, but in most places, we were an agriculturally based society.
Right.
And therefore, the more children you had, the more people you had to work your land. This is true in Australia, where I'm from, and the States and England, all other places that we think of here. And the more children you have, the better. And then over time, this declined because maybe people went into other industries and they found other ways in which to, live their lives and make their money. But still, we're looking at around four children per household. Then we entered the era of World War One, and this is where we see a very big drop off in birth rate, down to around just short of 3 per household. And then this period of time from 1940 to 1960, early 60s, is the period that we've all come to know as the baby boom. This is returned soldiers from World War II, forming households and multiplying. Right, so we reached a peak here in around 1960, where we had around 3.8 children per household, so nearly 4 children per household. So that was the big uptick. Now, what do you think happened after that, Gary?
Well, I'm gonna say we've slowly declined. I don't know.
Yeah, so I've hidden half the graph here
Yeah.
because it's quite a dramatic drop.
Okay. Not
And this
slowly.
is,
Quickly.
yeah, very quickly. So you can see here from 1960 down to say 90 into the 1990s, we had a dramatic drop. And this coincided with,
Hmm.
again, a change in work culture, as well as, and more importantly, the introduction of birth control as a widely available facility or ability for people to control how many children they have in their household. And when that happened, as you can see, we've dropped well below two children per household, and we've been below that two children per household. Looks like since 1975. Okay, now and right now we're way less than two.
Hmm.
Now, I just want to jump to this next slide and explain what this two means. So, let's say, Gary, you and your wife, at some point in the future, I'm sorry to be the one to tell you this, but you're gonna die. Okay,
What?
it's it's gonna happen. All right. It's terrible that we're laughing about this, but it's gonna happen to
Yeah.
you. It's
Yeah.
gonna happen to me. But let's just say that we have a husband and wife, and they, at some point in the future, they're going to leave this earth. And if they did not have children, then the population of Canada would reduce by two. Therefore, they call this magical number two children, the replacement rate. Because if that couple decides to have two children and that older couple passes, then when they leave this earth, then there's two people remaining and they've replaced themselves. So 2% or two is the replacement rate. Now, in the world right now, China, Japan, and South Korea are at the lowest, all coming in at 1.3, meaning for every two parents, for example, they're only having 1.3 children on average.
I hate
And
to be
where
the
does
point
Canada,
three child, eh?
that'd be the short straw.
Yeah.
But the thing here in Canada, in 2023, we're not far off the lowest in all of the world at
Yeah.
1.33 children per household. And what does this mean? It means that without immigration, our population would definitely decline.
Hmm.
Now, let me jump over to this next slide. And this talks about the need for immigration. What we have here is in 1980, you can see that for every pensioner, every person aged over 65, there were 6 working people in Canada who were paying tax and therefore supporting the pensions of one pensioner. Okay. Now, as we jump forward to 2030, at our current rate of immigration, that is not a decline and not an increase, but just our current rate of projected immigration, it looks like we're only going to have 3 working people to support every one older person aged 65 plus. And so, if this slide by itself, for me, Gary, just really crystallizes as to why we need immigration in this country, in that we need a tax base that's going to support the people who've worked so hard to live their golden years in somewhat relatively good economic situations, right?
And that's the key to all this is the tax base to support, our aging population, right?
Correct, correct.
Yeah.
And if you were to look at, say, Japan, and that's a country I lived in for a period of time, you're seeing a very diminished tax base supporting an ever growing older age group.
Hmm.
And the difference there in, say, in Japan is that a lot of those elderly people live together with their children and their grandchildren, which has traditionally been a way of life in Japan. It is changing. It has changed somewhat based on change in values and introduction of Western concepts. But I can tell you that it is more prevalent in Japan than it is, say, here in North America, where generally older people are put in aged care facilities or assisted living facilities. But this is something where, again, we may have to rethink how we're going to care for our aging parents going forward, especially if that's the tax base that we're going into.
Right.
Yeah.
Yeah. It's interesting.
And, this birth rate is really tied to economics and housing affordability. And the articles that I've read around this really show that people are choosing to have fewer children because of the economic ability to have children, right? So, can you have 5 children in today's society? I think it's going to be a lot harder than you could imagine, say, many generations ago. And so let's take a look at this graph here. And there's a lot of data here. So let me break this down. What this does is it shows your monthly payment for your mortgage based on a percentage of your household income. Okay. Now, I work in the world of mortgages, and most realtors also understand this number. They call it your gross debt servicing. And what that is they say that every month, let's keep it simple. Let's say your household makes $10,000 a month. For the most part, we would like to see 40% or less of that amount going to the cost of housing. So 40% is the number which has traditionally been the safe number. Now, when we look at where we are as a nation, that red one there, Gary, shows us at 48%. So I don't think that surprises anybody that as Canada, as a nation, we're above what is deemed to be sort of that comfortable and safe range at 40% per month. And as we progress to larger cities, and let's jump to our city over here at Toronto, we're at 72%. 72% of monthly income is going towards housing expense. And so if you're asking why are people having fewer children, I think that a direct line could be drawn to this.
Sure.
Yeah.
That Well, let's talk about that. I mean, if you make, and I know you were mentioning off camera, for someone that makes $10,000 a month, it's not really $10,000 a month, right? According to this, the way they calculate it, in a sense, right?
Correct. So what you're seeing on screen is the 72% of your gross income per month. So
Yeah.
let's just say, to keep it simple, you make 120 grand a year, you make 10,000 a month gross. But you and I both know if you're making 10 grand gross, when you get your paycheck, you're not getting 10 grand net in your bank account, are you?
No.
You're getting, let's using round numbers, let's just say you're getting around $7,000 out of that 10,000, with the remaining going to taxes. So that being the case, that household might be making $7,000 a month. And if household average expenditure here is 72%, that's $7,200 just for the cost of housing. Then you can imagine that that household isn't, well, after they pay their rent, or mortgage rather in this case, after they pay their mortgage, there's really nothing left to live for food and gas and all those other things, right? So again, this paints a pretty dire picture. But again, you and I were speaking about how we're seeing people deal with the new reality, where they're really combining forces, and how property ownership going forward is really a family sport. It's not an individual game anymore. Well, what were
Yeah.
you saying about that family in North York?
Yeah, yeah. So we were working with the family this past couple of weeks. A realtor came to me with some questions about how do we do this? Is there a way? And what we're seeing now, and this isn't the first time I heard of this, is someone looking in. So I live in York region, and as you know, there's some big cities in York region. But as you get farther north, there's a lot of land available, and you can buy some acreage. And there's 20 plus acres available for just over $1 million with a house on it, nice house. And it was this family's intent. It was three families in fact, and they wanted to look at purchasing this acreage to put multiple homes on it. And that won't be the first time nor the last time we have this conversation, Dion. I think things like that are going to become more and more prevalent as people get, I don't want to say creative, but just out of necessity,
Yeah, yeah,
we got to look at things like this, right? Whether you're, and we see it, there's some of I can think of Italian families doing this in the past, buying acreage and building a really, really large house, and it being two separate living quarters and garages on both sides of a big bungalow. And now we're seeing more and more people do things like that. And I think we do need to start building homes with multiple suites, whether it's in subdivisions or on acreages and things. And I know even my own parents have, a big old farmhouse in a sense, but they have a second floor
mm.
unit that someone rents from them. And we're going to start seeing a lot more things like that, Dion. I truly, truly do believe that.
Yeah. I think from that perspective too, I've always wondered why developers didn't finish that basement and make it rentable. I think that may be something, especially with zoning allowances now, especially in the city of Toronto, and it's going to expand across the GTA. Whereas before it was a zoning issue where you weren't able to actually complete that basement apartment. I think going forward, if I was a developer, I would be talking to municipalities now saying, hey, can we build this row of townhouses with separate basement apartments with separate entrances, if the design allows for it. I think that that's going to be in demand going forward. So that it may very well be, Gary, that it's a family, combined family, one brother living upstairs with his family and the other brother living downstairs with his family, or something along those lines. I think we're going to have to really start to rethink new builds in that way, and maybe even revise. There's a lot of these projects, Gary, that have been put on the sidelines. And I wonder if with these government rule changes, when zoning changes, that those projects could potentially be redesigned to allow for that, therefore making it more affordable. These are
Yeah.
things that I've been thinking about for many, many years, but this new zoning changing that's coming in may actually allow for it.
Yeah. And you might be thinking, you might be watching this too, thinking, uh, I don't I don't want to live with my brother or my sister or his family or their family and what have you, or anything. But if you grew up in Canada like I did, that's, it's not common, right?
Yeah,
But for a lot of the families moving to Canada, it's very common to have that as you said, moving from China, or people living in China often live with their parents and other
yeah,
family members. And for other parts of the world that are being attracted to Canada, that's a that's a normal occurrence. So yes, it might be somewhat strange to me who grew up in Canada at first. Well, the reality is, you know, it's not. That's not out of the ordinary in a sense. So
yeah. It may require some real cultural paradigm shifts around
yeah,
how we approach how we live. Yeah,
yeah, for sure. And just like, and I'm sure back in the 60s and the 70s and so forth, when Canada had its last, we'll call it immigration wave, there were cultural differences then. And, of course, I was born in the early 70s. And I can't tell you what they were from firsthand knowledge, but we know that there were, right. And same as there's some cultural differences now, but that's fine. We move and we evolve, and as you pointed out, Dion, it's a necessity for Canada to keep moving forward in a positive fashion.
yeah. And I mean, in the same way that we've came to realize a long time ago that just a single person is having trouble qualifying. Now we're realizing that a couple is having trouble qualifying. And so, from an economics perspective, if that couple needs to pair up with another couple, be it their parents or siblings, to actually buy in today's world, then that may be something that we just really need to accept and get used to.
Yeah, yeah. And maybe a workshop that we host in the future is, how do family members buy a home together, Dion? Maybe that's something. If you're wondering that right now, reach out to, you do not need to wait for the workshop. Reach out to Dion, and he can walk you through that, him and his team. Remind us, how can people get a hold of you, Dion?
Yeah, kangamortgage.ca or the Dion Beg on Instagram.
There you have it, my friend. So that's Mr. Dion Begg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.